All right, we're live, Howard.
We're live. It is tax day tomorrow, Ivan.
I know. I just finished my taxes yesterday.
You finished your tax? Did you use H&R Block?
I used TurboTax, and I had to pay, a lot, but it is what it is.
Ivan, good man. Paying taxes is a religion in this country. Okay, so it is Momentum Monday, and I'm paying my taxes today, so I'm in a bad mood. But the markets are in an increasingly, I would say, brush off any negativity mood, which is interesting. We're going to get right to the charts. I just wanted to tell everybody today that my friends at MarketSmith have been, which I'm a big, Investors Business Daily. I'm a big fan for, 100 years. I've been inspired by a lot of their work around our social leverage list, and they have let us use their charts. So we've been working with the MarketSmith charts, which is one of my favorite products. So we're going to try and incorporate them into the show today and test some new stuff out. So be patient with us while we go through some charts. So I want to start today with this thesis that I have and you have, that we always believe it's a market of stocks. We're trend followers, and we're looking for the best ideas. So let's take a look at how this market of stocks is doing.
Yes, let me just share my screen. And,
so now, Ivan, people just see our screen. So go ahead, tell people what we see.
I mean, on this screen, we can see the S&P 500 still struggling below its 50-day moving average, but above its 200-day. But in the meantime, there are plenty of industries that are making new 52-week highs. I mean, this is why we say that this is a market of stocks market.
Yeah, so we can see that, if you're just basically passively index investing, this year has been kind of a nuisance. There's a lot of volatility, a lot of headlines. Your account's gone nowhere if you're in a Vanguard S&P 500 fund. I was reading yesterday, 15% of the S&P is 8 stocks, including NVIDIA and Microsoft. So we're seeing when those 8 stocks are not moving, and in many cases this year with Google and Apple and Facebook down on the year, it's hard to get the indexes going. The one stock that is working, Netflix, new all-time highs after the close, Ivan?
Yes, it's been the #1 ranked stock on Market Wisdom for a while, hitting new all-time highs.
These are the MarketSmith charts, correct?
Exactly, yeah.
They have incredible information, which I've always loved, because they have the relative strength line. I can't point to it, but Ivan can. And what's the point about relative strength? And Ivan and I have our own social strength overlay that we use at IBD that we're talking to them about. But what is that, 98, Ivan? I'm blind.
It is 98. So that means that it's stronger than 98% of
98% of the stocks. So part of my old thesis, and this is an old IBD thesis, is I want to own stocks with 90 to 95 and above relative strength. Those are the strongest stocks in the market. It's not rocket science. I overlay a lot of my own personal stuff on top of that, as you've known over the years. But anyways, Netflix looks like it's right at around all-time highs after the close. Okay. So other than Netflix, though, in the FANG category, it's been a quiet year, and so the indexes have chopped, but there's a lot of stocks doing well. So it is a market of stocks. So let's go back to the S&P, Ivan, and you can start.
As you can see, the S&P is still trying to retake its 50-day. It's back into potential resistance, but in the meantime, we're seeing select retailers, select restaurant stocks breaking out from some pretty decent bases. And it's interesting that both of those industries struggled last year and definitely underperformed. And this year they're leading. I mean, this is what happens when market expectations are super low, and then all of a sudden they start to report better than expected earnings. And of course, the tax cuts are a big reason why those retailers and restaurants are beating estimates. Take for example Wing, which they sell chicken wings. They broke out to new all-time highs today from that. It's a pretty decent base, on a daily. And you can see here when they gapped up on much better than expected earnings. You see they had their volume was 4.2 million shares on this day, somewhere in November.
I just click up on the weekly. Wow. Yeah, okay. Restaurant stocks are, it's for people that, there was a great breakout on a weekly in the 30s back in the end of last year. So, okay. And so there is some retail strength. Don't know if it's taxes. I mean, this could just be in a growth. They could just be, I guess they're a competitor to that other wing place. I forget, but yeah.
Wild Wings, yeah.
And then I would say Lulu is in a complete up dog trend. My daughter owns some. She came back from, I was saying, Ivan, that this stock is got all the characteristics for me of an 8 to 80 brand at this point, right? Lulu appeals to 12-year-old girls right up to 70-year-old women, and and I'm a pear-shaped man, and I love their product. They've also managed, I think what's been smart about Lulu is they open next to Apple stores in the malls. That's the only safe place to open in a mall. Malls are poison right now. So they're paying up. They're opening next to Apple. That's where the traffic is. It's like the old food court. And so, the risk being it is a high, it's always going to be an expensive stock, and they're selling, high margin, but really expensive clothing. And so it's on my list. I think in a good market, this stock would already be well over 100 on that breakout. But I feel this brand is on the verge of becoming an 8 to 80 brand, which means, on 20% dips, I own it, and you just ride these trends. This could be a 15-year trend as they expand into Asia.
It's possible, but I mean they're in a very highly competitive industry, and
it's competitive on the low end between
true
all the knockoffs. Trust me. I mean, I've been hearing that same complaint. I mean, this is a company that's running almost without a CEO. The product is the product. In the end, Ivan, this is about the product, and the product. They've figured out e-commerce. People love the brand. Women who wear the brand, it's kind of like a footprint. They have a DNA of your behind, and women trust the brand. So it's not so much about them being a retail company as they're a product company. And I think it looks expensive. It's a hard stock to get excited about, but this is an 8 to 80 brand. I don't own any. My daughter owns some, but I'm really considering how I think about it. If you go back to a monthly of the stock, you can just see how strong it's been. This got everything going against it. This should not be working, right? Malls are dying. It's an expensive product. Millennials are cheap. I don't know. You never hear anything positive, yet it has a relative strength of 95. It's breaking out of a, 7-year base, Ivan?
Yeah, they have a huge moat. I mean, I know that many people are switching to cheaper versions like Fabletics. But yeah. Lulu is still, in the high end, they don't really have any.
They've learned to turn their ego in every 3 months, and there's new stuff. So not an easy business, not my favorite. But, in an era of where Starbucks is struggling, I would pull them up next just because I took them out of my 8 to 80 list a while ago. And it seems to be, stuck, but at the same time, it's hard to give up on keeping an eye on it. Let's go back to a daily on that. It's kind of been stuck since 2015.
Yeah, it's been in a sideways range, but it's definitely one of the most recognized American.
Yeah, and I pulled them out of my 8 to 80 brand just because I wanted to create room for something like a Lulu, right? So the 8 to 80 list that I talk about is filled with some financial service companies and the FANG companies, but I pulled Starbucks out, and I've been looking to replace it. Domino's kind of fits into this 8 to 80 brand. It's a technology company meets food company. Food, I use the term loosely. But you can see that Domino's has been the right company. If we go back to a weekly, that has been the right product. That would have been the right company in my 8 to 80 leisure and food, over Starbucks, and obviously there's companies like Wing, but they're not is globally recognized. And there's McDonald's, which, has had a rough couple of months, but I'm considering them in my 8 to 80 list because, I eat their breakfast. I know it's embarrassing, but I love their burritos.
So it's you, Warren Buffett, and Donald Trump, who eat every day.
It's a pretty wide swath of a user. Let's go to a daily, Ivan.
Sure. Here we go.
So to me, between Lulu, Domino's, and McDonald's has coffee. I kind of like McDonald's because it's down 20%. And I like buying my 8 to 80 stocks when they're down. Again, it's had a great run over the last few years, but I do think McDonald's, in their partnerships with Uber and Uber Eats and their all-day breakfast and just the way they've expanded that menu, it's an interesting 8 to 80 brand. Okay, so now let's go to some ideas that are actually working right now on my watch list. So I'm going to go to your SL50 list.
All right, just a sec. Okay, let's go to the SL50 list. As you can see, Netflix has been leading for a while. It's been ranked #1.
There. The longest on the list are some of the security stocks. You see Rapid and Fortinet.
Definitely. Cybersecurity has been...
Again, let's go through what the social leverage list is.
Definitely. Cybersecurity and business software, enterprise software stocks are standing out. And I'm seeing quite a few decent setups in those areas right now. Despite of everything, many of those business software stocks just went sideways while the S&P and the Nasdaq 100 went down 10%. So if the market averages rally from here, those stocks, the business software stocks, are likely to outperform. And we can take a look at at a few charts. Let's go back to...
But walk people through the Market Wisdom 50 again. In your product?
Yeah, just one sec. Okay, here's the list, the SO50 list. We update it on a weekly basis. And the goal of this list is to basically highlight actionable setups, the current market leaders that are close to breaking out. And if you want to get the top 10 of the SO50 list for free in your inbox every Sunday, you can sign up for our free weekly email. Just go. I'm sorry?
You give away the top 10 every week for free?
Every Sunday in your inbox, you can get them for free. Yeah. Just sign up for our free weekly email on marketwisdom.com and you'll get them in your inbox.
Well, that's pretty good.
Yeah.
And maybe give people the bottom 10. So much.
It's possible.
Anyways, okay. So Netflix, I'm going through the top few that I own. I own Netflix. What do I own? Okta. People know about Zendesk, MongoDB. So really, this is where I surf. Keep scrolling down, Ivan. If we're in a bull market and you don't own these stocks, I think you're not fishing in the right place. So whether I'm either talking about these stocks or you've heard about these stocks if you're a momentum trader. And what the SL50 does is really try and hone it down on some of our own proprietary ways to measure companies on top of just momentum and relative strength. And you can see there's some new companies added every week. We track how long they've been on the list. But if you follow me, this is where I hunt from.
It can save you a lot of time, and it can help you find potential winners. But that you just need to figure out how to trade them, and this is where we come and we actually highlight specific setups for you and send trade ideas on a daily basis. So, do you want to go back to the chart so I can highlight some ideas that I have from the list?
Yeah, go ahead.
Okay, so a couple industries that I mentioned, cybersecurity definitely standing out. We have stocks like Fortinet breaking out. There's some rumors about new acquisitions in the sector, which I guess is driving all those.
FireEye was, if we go back to a weekly, that has definitely crashed in the past.
Definitely, it has a big 80% or more crash.
Relative strength-wise, increasing is at 90. It's breaking out of 2-year, 3-year base. in an area where, yeah, they're probably relatively, if they can increase, if they get some momentum going, they're an acquisition target. The biggest player in this, okay, so Proofpoint is another one.
Proofpoint, also CyberArk, definitely looking very interesting.
PANW.
Yes, this one too.
The Networks is the 900-pound gorilla right now, kind of like the Cisco of cybersecurity. These stocks are not for the faint of heart, but you can see relative strength 93.
It is building a huge base. I mean, if this stock clears 200 in a good market, it's probably going to 300.
Yeah, I'm long, but I've been long, kind of not so much on momentum, just because I have friends in the industry that highly recommend this stock, and I was buying it more on weakness than on strength. But this becomes a momentum stock above $200, and if we look at the ETF HACK, HACK, I think it hit all-time highs today.
Yep.
I mean, it makes sense. Listen, if we remain in a bull market, the whole TED in Vancouver, I was getting reports from friends. The whole TED talk was about data and security. Sure, you know, we've got Internet of Things and toothbrushes that brush your teeth for you and boot up in the morning, and your car turns on, and we've got electric cars. But in the end, we cannot turn back the clock on Facebook. So the trend coming out of this Facebook scandal and the Russia hacking is that we can't turn back the clocks. So you can buy the great companies on dips like Facebook because they're not going to be shut down. They're just going to be regulated. Or you can stick to security, which is like all the companies have to now pay, kind of like a fine, they have to pay for cybersecurity. So the poor man, the wimpy play is to own Hack, which is an ETF, and you can look at the components. Again, this is an all-time high. You know, it's a simple name to remember. You know, I prefer not to own ETFs. I prefer to own the individual stocks. But, you know, if you want to have exposure to what industry should work if a bull market continues, my money is on this sector.
Yeah, definitely a sector showing relative strength this year for one reason or another, and offering some good entry opportunities even right now in some of the names. And also the other sector that definitely stands out in 2018 is enterprise software.
Yes, we've been all over this. It's been, you know, what's been really interesting, I really did think if this market rolls over, they will get crushed, these enterprise stocks. I mean, most stocks get crushed, but the valuations have become crazy after the Mule deal. But, you know, Okta's a stock that I've been long. The reason I'm long, I don't want to repeat it, but technically, credible stock, 97 relative strength. You know, tried to break out before, you know, even during this correction, it's held its base. No real competition in the public space for hedge funds that want exposure to single sign-on security type stocks. It's not cheap. These companies in enterprise will never be cheap. That is a problem that you have to live with. And if they do look cheap, they're scary as hell to own. So you've got to own the best companies. So Okta is now best of class. MongoDB, MDB. You know, I mentioned it at 30 on this show. You know, it's you know, it's pulled back a little bit, but again, it's still a leader and still a young company as a public company, but really interesting enterprise company. Zendesk, which we've been talking about here forever, really has hardly budged, just digesting the earnings. So enterprise, you know, that's the other sector. Is there anything else that stands out?
I mean,
before we go,
those I like to go with stocks that belong to industries that show relative strength, because, you know, just finding a great technical setup is not enough. You need some immediate catalyst that can, you know, change market expectations and therefore prices for a setup to work. And this is why I focus on what's working right now, which is, you know, cybersecurity, enterprise software, you know, restaurants, and some select retailers. You know,
last week, I like it. Those four industries. Now, Pegasystems, this looks interesting. So this is healthcare?
I'm not really sure what it is, but let's say. Well, wait, there is a description here.
Yeah, but you pulled it up for a reason. Is this on your swing list?
Yeah, it's
Beautiful.
one of the stocks. Yeah,
it's beautiful. What's the weekly look like?
Even better. It's looking really tight. Getting ready to break out. Yeah.
Thing for just around a year, in between 45 and 60. Yeah. Is this on the market? Is this on our list, Ivan?
It's one of our swing trading ideas. Yeah.
But it's not on the SL50?
No, not yet.
Okay, so Ivan has a swing trading service. It's easy to follow. Ivan is a great coach on a day-to-day basis. I am not. I have my free blog, and I have Peloton, which is my monthly idea service. But Market Wisdom is the best deal going. How much is it a month, Ivan, for Market Wisdom?
It's only $99, but we do offer 7-day free trial, so you can just check it out, see if it exceeds your expectations. If not, just let us know, and there's no hard feelings.
What do you think of these MarketSmith charts? Love them.
Yeah, they look really pretty neat. I mean, especially with that fundamental information that you get on your screen, that it just really saves time when you research ideas.
Yeah. And it says marketsmith.com. I'll get watchers at discount over time, but I haven't used it in a while. But I can see just from market cap on down, it's just got everything that I need. So you can see Pegasus, is it 4 billion? Is that what's for, or is it 480? I'm so blind, Ivan. Do you think that is?
It's
4,000 million. So that looks like
4.8 billion dollars. Yeah.
Yeah, $4.8 billion. So it's a big ass company.
But it's a very small float, only 36 million shares, which means
I have to do some research on this, but that
can be very volatile, up and down.
Let me know if you swing trade that. Okay, so just quickly wrapping up, the market is still in no man's land. I think below the 50-day. Let's go back. Yeah.
Let's go back to daily. Okay.
We're still in a really good uptrend with just, excuse me. Bless you.
Bless you.
We're still in just this chop that started because of the
various reasons. I mean,
the volatility that picked up. So we're still just in a nice chop. There's definitely a lot of fear. The relative strength of the Nasdaq is dropping. So I think that goes to show that retail.
Definitely change in leadership.
Some change in leadership is afoot from the FANG stocks, semiconductors, and that's the relative strength helps you find that. If the Nasdaq QQQ shows a 76 relative strength, and you can find stocks within that index that are in the 90s, that's where you want to look for where the money is flowing. So little tricks that you can learn by looking at thousands of these a week over the years that we've been doing. Hopefully, we pass those on. Ivan, thank you as always.
Thank you, Howard. Okay, let me just stop the show.